Now let's talk about the balance of payment account. Okay, and sometimes it's called the balance of international payments, or BOP for short. Okay, now the balance of payment account simply says that we need to record all transactions of goods and services and also financial assets across the border, right? So here, all of these transactions can be made by households, businesses, or even the governments. Okay. Now, specifically, we have three types of accounts here. And the first one is a current account, CA, which we already discussed before in this chapter, right? It records or reflects all exports and imports of goods and services. Okay? And for example, when we purchase a foreign-made goods and services, it will be recorded as a debit under current account. Okay? And when we sell the domestically made goods and services to foreigners, it will be a credit. Okay? Or another simple way you could, figure this out is the flow of money. Okay, so when we purchase the foreign goods and services, money flows out to make the payment, right? So it's going to be a debit for United States. Okay, if the country here is the U.S. And when we sell goods and services to foreigners, then the money flows into the United States, so it will be a credit. Okay. The second type of account is a financial account, FA. Okay, which reflects all asset transactions. Okay, so here again, when we purchase the foreign assets, it will be recorded as debit under financial account. Okay, once again, this means the money flows out to make a payment. And when we sell the domestic assets to foreigners, money flows in, so it will be credit under financial account. Okay, and the third type of account is a capital account. Here you would find, the transactions about intangible assets, long market activities of asset transaction, debt forgiveness, copyrights, and trademarks. All of these would be recorded under capital account. Okay. Now on the worksheet, you will find some examples, real-world examples, and after the practice, you should have a pretty good idea about how these three accounts work. Okay, in reality, like how we're gonna record all of these transactions. But one thing I got to see here is sometimes, a financial professional would say there are only two types of accounts, which are current account and a financial account. That kind of the classification is also correct. Okay, this is because at least for the U.S., the capital account, the transactions recorded over there are pretty small, okay, in terms of the dollar amount. In other words, it's negligible, okay? Or another way you can understand this is we can combine the capital account with the financial account, okay? So that's why, sometimes people say there are only current account and financial account, okay? So again, don't be confused. But oftentimes when you look at the textbooks, we would say that strictly speaking, we have three types of accounts. All right, here, when we record these transactions of goods, services, and financial assets, we follow the accounting rule or the principle, the double entry principle. In other words, every transaction would be recorded in two different places, okay, or will be recorded twice, okay. And So here it's again for our BOP sheet. Okay, and the first example is if you import a DVD of a Japanese anime by using your debit card. Of course, this is going to be recorded under the current account as debit, right? Because the money flows out to make the payment, and you know imported this product, okay, to the U.S. So it's a debit under current account. We also find that here the Japanese producer of the anime deposits the funds in its bank account in San Francisco. In other words, this bank in the United States sold the financial asset, which is a deposit here in this case, to the Japanese producers. So the money flows in, right? And into the United States, I mean. So it would also be recorded as the credit under financial account. Okay? So putting together, it's a debit under current account and a credit under financial account. Okay? Double entries, right? The second example, you invest in Japanese stock market by buying $500 in Sony stock. And here you are purchasing a foreign asset, so the money got flow out to make the payment of your purchase, right? So it's going to be a debit under financial account. At the same time, we find that Sony deposits your funds in its Los Angeles bank account. So like, the previous example, here we said this bank in Los Angeles successfully sold the financial asset to Sony. Okay, the asset here would be a deposit, $500, and so it will be a credit under financial account. All right, putting together here, it's going to be recorded as a debit and credit under financial account. Okay, for each one, it's going to be $500. Okay. The third example is about debt forgiveness. So we said here the U.S. banks forgives $100 million debt owned by the government of Argentina through the debt restructuring. Okay, so debt restructuring means the borrower could not make the payment. Okay, so they would ask the debt holder to restructure the contract. In other words, probably give them a longer period of time so they can, pay back, or they can simply, wipe off this debt from the accounting book. Okay, or they could argue, a lower interest rate, stuff like that. Okay, and so here you find that the U.S. banks forgive this $100 million debt. You could imagine that this means the $100 million flow out of the United States, okay? And because we, based upon the debt contract, the U.S. banks should have the right to connect that much revenue, but they gave it up, right? So here it's going to be a debit under capital account. Okay, remember we said debt forgiveness goes under capital account. Now here the U.S. banks who hold the debt thereby reduce the debt by crediting Argentina's bank accounts. So here you could imagine to do this, these banks, or we could pretend there's $100 million flow into the U.S. so these banks can use them to reduce the debt. Okay, so this is going to be a credit under a financial account. All right, so put together, it's a debit under capital account and credit under financial account. Okay. By the way, as I already mentioned, on the worksheet you would find several more examples. Okay, so please go ahead and finish them and bring it to class. Okay, we can check your answers. All right, so here we want to give you a quick, take a quick look at the U.S. Balance of payments accounts, the real world numbers in billions of dollars in 2015. Okay, so you find that, by the way, these numbers can be easily found on the Bureau of Economic Analysis website. Okay. All right, so in this table, you find that there are actually three blocks or sections. At the top is a current account. At the bottom, it's a financial account. In the middle, it's a capital account. Once again, when you look at the numbers under capital account, it's super small. Okay, that's why oftentimes people do not pay much attention to it. All right, so the current account in 2015, we find that the U.S. exports about $3 trillion of goods and services. So this is how much credit we have under the current account. Okay, and U.S. in the same year imported about $3.36 trillion of goods and services. So this is the debit. Okay. And we also have the led unilateral transfers, about 144 or 145 billion dollars here, okay, which is also recorded as a credit. So when we figure out the balance on the current account, it's going to be the two credit items, number one and number three. We add them together and minus the debit here would be the import. Okay, so in this case, we find it's minus $462.97 billion. So the minus sign here means it's a trade deficit, okay, because we import more than what we export, okay. Now the financial account here, we find that the net U.S. acquisition of the financial assets, so here we're talking about, we purchased the foreign assets, it will be $225.4 billion. And we also have the foreign investors coming to the U.S. and purchasing our assets. So it's going to be the U.S. incurrence of the liabilities, and it's $395.23 billion. Okay. And we have the net financial derivatives, which is approximately $25 billion. Now, when we are trying to figure these out, the three things for financial accounts, we use number 5 minus number 6 plus number 7. Okay. Interestingly, here, actually, number 5 and number 7 are debit. Okay, number 6 is a credit. Okay, so here you find the net financial flows is minus $195.23 billion dollars. But the minus sign here, instead of like what we discussed above, it shows the deficit. Here, this minus is actually the surplus. Okay, the surplus. So the financial account is in that year has a surplus of $195 billion. Okay. Now you find there's a big difference between these numbers and this one, the balance on the current account. So the difference between these two is what we call statistical discrepancies. Okay. In this case, we use this number minus 195.23 minus 462.97. Remember, there are two minus signs. So finally, here we got the plus. Okay, $267.78 billion. That's a discrepancy. Okay. All right. So here again, we basically talk about the balance of payments, the definitions or categorizations. We look at the real world numbers. Okay. And so that's all for this video.